Um, so welcome everybody to Mortgages with Millennials. I'm Robbie Chrisman, joined per usual by Kristen Messerly, my amazing co-host. And today we're very appreciative to have Ralph Remy from National MI on. Hey Ralph, how you doing?
I'm great, Robbie. How are you? Thanks for having me on.
I'm good. Always a good time of the month getting together with Kristen and talking next gen home buying, which we'll certainly be talking a lot about today based on this next gen home buyer report. But yeah, always cool trying to add value to the people that are out there in the audience. Kristen, how are you feeling?
Yeah.
Doing good. I just went on my first vacation of the year. Just got back from Mexico last night. So yeah, feeling fresh.
Which part? Anything to share?
Okay, well, have you been to Santos? It's right outside of Cabo.
I have not. I've heard good things.
It's the sleepiest town I have ever been to in my whole life, but it's nice for a sleepy town. So yeah, it was great though.
Well, welcome back. I guess I should have said this offline to you. I will be in LA at the start of next week. So let's try and I'm bad on the follow through at actually getting coffee after I propose, but I will try for the
We'll
start.
try again.
Yeah, we'll try again. That'll be good. But let's not waste too much time here. I do want to get into this next gen home buyer report. And obviously we have Ralph from National MI. National MI is a sponsor. National MI commissioned this 2025 next gen home buyer report, which people that are looking for it here, I'm going to paste it in the link in the chat. Let's see if I can do that to everyone. Let's see if I can do. Boom. There's your report in the chat. If you guys want to go check it out, download it. I know this is kind of near and dear to both Kristen and Ralph, so I'm going to cede the stage to them in a second. But National MI, thank you very much for sponsoring today's show. They're big on the next gen, the multicultural, the multi-generational borrowers, getting more people into homes. These people comprise such a large percentage of the overall home buying population now, and whoever's on this call, I'm sure National MI has stuff for you, whether you're a lender or a servicer, a borrower, any of those things, an originator. Uh, they have something for you. But I'm rambling. Kristen, talk about what National MI means to you. I know they're like so near and dear to your heart.
Yeah, I've partnered with National MI. Ralph, has it been, I think it's got to be 10 years now. And we have
Yeah.
been, yeah, so we've been working on, publishing next gen homebuyer trends. I've been doing a lot of speaking in partnership with National MI, but this is our fifth annual report, which we started in 2020. And it's been really interesting to look at some of the trends and growth and just what's changed over the last 5 years. And this year we expanded the report to include an actual report with written, expansion from within, looking back at the last few years, as well as slides. And so, yeah, I'm really excited to dive in. But Ralph, any initial thoughts on how the report has changed or how we've kind of framed up this year's report?
Yeah, it's been, first of all, thanks for having me, both Robbie and Kristen. Obviously, Kristen, it feels like we've been talking about this next gen report now for what feels like months because you kind of go through the planning stages and now it's a reality and it's out and published. But it's been really cool to see the progression over the last 5 years. And I'm excited because the first one was just as joined National MI. So I've been kind of part of the journey of these last 5 years of seeing how the next gen perspective of home buying has changed and evolved all at the same time over the last 5 years. And some challenges have unfortunately gotten worse. Some challenges have gotten better. And it's up to us in this industry to find ways to continue to make the better be the more often thing we look at as opposed to the exception to the rule. So that to me has been, I know we'll talk about some specifics on things that we've seen along the way, but that's been the coolest part of the evolution of this report. And this year, truly going back to a report format. I know the last few years we almost had it in presentation format. Really gives it an extra feel to give context to the stats. I think in the past we had some stats in there, but now we have a little bit of the explanation and the mindset of what truly the next gen home buyer or just even the next gen community is thinking beyond what the numbers tell us.
Real quick, Ralph, before we get into the report and all, can you talk?
Yeah.
When did you join National MI? What do you like about working there? Can we get a little background on the company? I know you mentioned you're in suburban Atlanta, but some more color.
Yep. So outside Atlanta, I joined National MI right in smack in the middle of the pandemic. So great time to change jobs, but it was the perfect fit for me. I had already been doing some training work with National MI in my previous role. And for me, what had me join National MI were the people. You gravitate to the people you work with. You gravitate to the opportunity to continue to help and support people within our industry. I lead our training and marketing team. So training is dear to my heart as well. And that's something that Chris and I have known each other for quite some time, even prior to my time here at National MI, because of our desire and interest in helping others, helping the community, and just helping our loan officers out there be better at what they do each and every day. So that's kind of what kind of keeps me going each and every day.
Love it. So I am going to repost this in the chat, but everyone can access the report at nationalmi.com/nextgenresources. I, for some reason, can't do that. So Robbie, if you could do it, I don't know why it's not letting me post anything. There we go. So yeah, so I want to frame up kind of what the report consists of, and then we'll dig into some of the highlights and where I think, as we were talking about some of the challenges and opportunities that have come up in this year. So each year we survey 1,000 millennial and Gen Z, or at least 1,000 millennial and Gen Z consumers. At this point, we've surveyed over 7,000 millennials and Gen Zs, and we've looked at categories around education, challenges, what their feelings are around home ownership and financial literacy and financial habits. And then we've also compared different demographic segments to see, where there might be some movement or extra, challenges or opportunities. So I wanted to, in the report, which you can actually, I'll share my screen and just kind of show you I sent a request to share my screen. So
there we go.
There we go. Okay, cool. So I want to just show you guys, you can access the slides here as well, but the, let's see, the report is, kind of walks through some of the, the financial situation, home buying perspective, trust and confidence, which we'll get into, information access, and you can see some of the extra, color around each of these statistics and some of the conversations that we'll talk about today. And then a couple things, there's a 2-pager here on page 5 that if you guys wanted to do a presentation to realtor partners or to any, with your team, you could print out these 2 slides and just walk through some of the top 10 insights. So just wanted to throw that out there as kind of a tool that we can talk about how you leverage that as well. So it's a pretty in-depth report, and there's a lot of different directions to go, but I wanted to start by asking you, Ralph, what were some of the insights that you thought were most interesting to you? And then we can kind of go from there.
Yeah, to me, there's 2 that immediately gravitate. Actually, there's 2 immediate, and then there's 2 new ones. I'll kind of say that kind of came out. So I'll kind of go to the immediate gravitate one, which are topics that have continued to kind of rear its head out to and show up in each and every report over the last few years. And that was distrust among the industry and just as a whole. And the second was the amount of, education videos that NextGen are going to find information on the home buying process. So I don't, maybe we can kind of split that up here a moment and kind of just talk about one before the other. But so let's kind of talk about distrust. It almost feels like the elephant in the middle of the room where, you may be talking to somebody and they're meeting you with this level of skepticism every single time you're talking to them. And how do we come through that? And I think, Kristen, in the report, we saw that it's actually gone down compared to last year, which, we know we're in an era of distrust, I guess I'll call it. But the fact that we haven't made any kind of progress to that and actually to the opposite effect, we've gone in the wrong direction, really stands out to me. And how do we as an industry build a level of trust with the community in order to kind of turn that around, especially with next-gen home buyers who have gone through a large level of financial uncertainty over the course of them kind of growing up. They've seen their parents go through financial uncertainty between we've all lived it in this industry. Well, they've lived it in the reality of their finances as well. So kind of that's one that stood out to me. And I'm sure you may want to add something to that as well.
Yeah, I mean, this was something that we've been tracking over the last few years, and I think it was 2021 when we first saw this big distrust statistic come up, and we've drilled in every year on this same question, same phrasing to track this over the last few years. 2021, we saw that 2 in 3 millennials and Gen Z thought lenders were not trustworthy or reliable. And so that was kind of something that was like, whoa, this is huge. We need to really take a look at this. And we're seeing distrust growing across all sectors. So it's not just this industry, but you see it pretty significantly with loan officers in particular. And I'll share my screen here.
Yeah.
So this year we saw this drop all the way to only 1 in 5 believe that that loan officers specifically will help them make smart decisions about their mortgage. And it's always been higher with realtors, but it's really dropped significantly with realtors as well. And so you see this across all different sectors. If you drill into like where are people in specifically this population in this industry, loan officers are still at the very bottom when it comes to where people want to start their journey, where they feel they can trust someone to help them make smart decisions. And we talk a little bit more about this in depth in the report, some of the roots of distrust and where you can go from there. But I wanted to, pose this back to both of you and the audience, but why, I mean, where do you think that this is an opportunity? Like, I see this as a huge opportunity. I know it can feel frightening to think, wow, we're seeing trust dropping so significantly over the last few years. Where do we go with that? But I also think that means that there's an opportunity for someone to stand out as someone who's trustworthy. So I want to pass it to you, Robbie. What are your thoughts on that statistic, and where can this audience go with that?
I'll kind of twist it slightly, and my dad is in the audience. He hates it when I answer a question with a question, but I wonder how much of this is distrust in home buying in general rather than institutions, because the affordability has gotten out of hand. Whether that's interest rates, whether that's the cost of homes. I think in the 100 largest metros in the US now, it is cheaper to rent in every single one than it is to own or buy a home. And so I wonder if there's just kind of this larger distrust of, is home buying all it's chalked up to be?
Yeah.
And so I would think that there's some overlap there, but like you said, I think it's a great opportunity for like people in this audience or originators to win back some of that. And we're starting to see some new trends, whether it's blending technology with the personal touch. There's ways that I think people can really be heroes at the end of the day. And I've talked to a lot of top originators, and my takeaway from speaking with them is always, there's somebody that I trust. They're a loyal advisor. I feel like they have my best interests at heart. They're not trying to sell me on things. And I think the younger generation, like a trademark, not only of millennials, but Gen Z probably more so, we're bombarded with data constantly. We know way more than we should know. We see way more than we should see. And so we're able to like filter through a lot of things almost. And when somebody's selling you on something, you pick up on it quick. And versus when somebody has your best interest at heart, I think the younger generations have a pretty good BS meter in that sense. And so it just goes, a big part of the show when we launched it was, how can we, Kristen and me, help some of these older originators or people that are trying just to access the next generation of homebuyers? How can we help them win business? And so I think that's a big thing there, is being an advisor rather than somebody that's selling something. But Ralph, I'm rambling here. What's your takeaway from what Kristen asked?
No, you hit a lot of those in the head. And I think part of it is a little bit, hopefully people are seeing this as eye-opening, in that you can't automatically assume because you work for a bank or a credit union, outside of the IMBs out there. But if you're at a bank or a credit union, that doesn't automatically mean they trust you all because they trust that bank having their deposits in there. There's a different aspect and a different component in here. And I'll throw in, this was one of the ahas of this report, kind of those two separate ones I talked about. One of them was the number one person that seems to be the ones that NextGen is trusting right now are their financial advisors. And that was like a wow for me because that's a new one. That was a new data point we received this year. And it makes you start wondering, well, what is a financial advisor doing differently than what maybe I'm doing out there as a loan officer, if you will? What types of conversation? You think about financial advisor, they're always asking all the questions to understand the full scope of their client's financial picture before they go make a recommendation. They're required to do that by their licensing that they have. So in order to gain that trust, they're learning about them, and that seems to be resonating with next gen. So are we asking the questions beyond the 1003? To your point, Robbie, I was with a top producer last week who mentioned, and he was getting kudos from his ops team about every time they call him with a question on a file, he knows more than just what's on that 1003. He knows the life story of that borrower, where it's coming from, et cetera. And you can tell he built that trust by knowing their full financial picture, knowing the story, knowing the why. And are we digging deep enough to understand that why, like a financial advisor would, to be able to gain that trust and increase those numbers?
Oh, that is a clip that I want us to share beyond this session. That is exactly right. I think so many people, I think there's one aspect of, if you're treating this as a commodity and just a means to the end, then I mean, it's going to continue to make people feel that they are overwhelmed, they don't know who to trust. And, if they can push through all of that, maybe they will go through the process. But if they feel that you're transparent with them, that you're personalizing this for their situation, they're going to feel so much safer and want to make sure everyone they know and love goes to you for that support as well. But I
Yeah, I
want to,
would say,
oh
Kristen, real
yeah, go
quick,
ahead.
there's a lot of financial institutions out there that are trying to win borrowers for the length of their life cycle. Hey, what products can we sell them on? Like when I was at SoFi, it's student loan refinance, then it's personal loan, then it's mortgage, then it's wealth management products and brokerage, and so you see how you can capture somebody over the length of their life cycle. IMBs don't necessarily have that product package. And so the loyalty aspect, how do you build loyalty? Being a trusted person that they're working with is that much more important if you're going to get repeat business, if you're going to get referral business, whether it's from a bar or realtors who provide a ton of business too. It means that it's that much more valuable for you to focus on that. Kristen, sorry, I cut you off.
No,
Yeah,
that's
no,
great.
and I'm sorry, Kristen.
Oh,
I'll
go
add
ahead.
to that, Robbie, where I worked my whole career in a bank, in a banking environment, and they love the word. It's almost like a bad word in my mind, wallet share. Everything's about wallet share and share, and I think the new generation, like next gen, has gotten sick of that word, and they understand. To your point earlier, they can see the sell factor. They know when you're trying to sell them yet another product. So as much as we say we don't want to be transactional, in some ways, from their perspective, it's relational in terms of understanding them, not necessarily like the old meaning of transactional versus relationship. We got to forget that because we're just working on this transaction, but we're building a relationship within the transaction. In the old ways, they thought relationship meant getting more business from them. You'll earn the more business if you have the trust.
Yeah. Yeah, one of when I do presentations on this era of distrust, often sponsored by National MI, I talk about 3 E's, one being empathy, another being education, and the last being engagement. And one of those, I feel like the empathy piece is often missed, and we overlook this idea of like, people are really scared. People are nervous that they're going to be taken advantage of, that they're going to go into something that isn't going to be the right fit for them, that they're going to pay more than they needed to. And I do think, to Michael Scott's point that he mentioned, do you think the higher level of distrust is correlated with an increased usage in using online channels? Because the online trigger lead outlets are less trustworthy. I absolutely think that people, for a lot of reasons, the online channels in a lot of different directions can cause that distrust. But people feel like they know that they're getting sold on something. And so if you can come in as this personalized, holistic approach that Ralph was talking about, then they're going to feel like, okay, they're going to look at my whole picture. They're going to tell me whenever something isn't the right fit for me. And to Robbie's earlier point around affordability, I'll share my screen again for a second. There's this, we saw that only 19% believe now is a good time to buy a home. And so that's a huge, whenever we look at affordability, that is going to be a really big factor. 40% of millennials said uncertainty about the future was a current barrier to saving for a down payment. And people are feeling that this is out of reach. So while the majority of people, the vast majority, say that they want to buy a home, only 30 or 35% believe that homeownership is just a dream. And so if you can empathize with them and say like, hey, there's a ton of information out there. We know this isn't the best, like if you can show them this is a difficult pathway, but here's how you can do it. And this is where it gets into kind of the optimistic part of the report to me, is that we saw a lot of creativity in the way that people were thinking about saving for a down payment or buying a home, and looking at things like co-buying, which we've explored on this show, and looking at how you can come to home ownership and through creative strategies. And I think that's where there's a huge opportunity for loan officers to come in and say, hey, like, I know that this might be really difficult for you, but here's what just a flat out rent versus own looks like for you. Here is what, this kind of cost analysis looks like, or here's what it might look like to explore down payment, assistance programs. Those types of things can make all the difference in the world when it's personalized for them and they understand that you get what they're going through. Empathy and education engagement. Yeah, but what are you?
And I'll add to kind of going from empathy to your second E, which is education. Now we go into, all right, so how do you start building that trust? You have conversations with them, but you have to engage them somehow before the conversation even happens. And I think that leads with education. So one of the big stats we found is that they're using YouTube as a big education source, all those videos they're watching. And one of the questions I get asked all the time, I know Kristen, you and I have been asked this questions countless times, is what do I post? What do I do a video on? And I always like to say, anything that you think will engage your clients, think about like the low-hanging fruit is, think about the questions that your home buyers or potential home buyers are asking you every single day in your day-to-day. What are those questions? Post the answers in quick short form videos. You have, the report said that 53%, and you can correct me if I'm wrong there, keep me honest, Kristen, but 53% said that they didn't have any type of financial education during school. So they're not getting any type of financial education along the way. So sometimes maybe it's just us kind of going a little bit more global and posting videos, not just about the home buying process, but maybe just how to manage your finances so they can get their assets in order to get ready to be a home buyer. So you start putting some of those things together and you're starting to build a little bit of that trust and getting that name recognition to engage you by educating, and then you kind of move forward.
Yeah, no, that's exactly. This is where all of it kind of fits together. But you mentioned 53%, but an additional 30% said that it was just a short lesson or optional in their schools. And I think that's not surprising to most people. But of course, that leads to a lack of confidence. That leads to skepticism. And yeah, how do you build that? And we might, jump ahead here, but you were mentioning YouTube. Yeah, YouTube is a great place to build trust, and it is the #1 source that they're going to for homebuyer education. And then social media is a growing source for especially Gen Z, but everyone is going to social media for more homebuyer information. And part of that is fueled by this distrust. Like, where are they going to go if they don't have someone that they feel comfortable reaching out to that's an expert? They're afraid they're going to get sold to by them. Then they're going to go to social media and get some, more information. So I think that's a really interesting area to explore. And then the other one that I'll just like kind of mention briefly, but build off of, that I thought was interesting too, is that ChatGPT or AI was a growing source of information and a tool that people use. And I think a lot of that, yes, they're pulling from the internet. ChatGPT is the new Google. Like, that's where people go to ask questions and get information. But this is the first year that this has come up. And that's a growing source for people to feel empowered. And why is that? Because they don't feel that they are empowered by experts, I think, and they're, but that's an opportunity. That's where you as the expert can come in and say, hey, let's look at the whole picture. Also, here's some prompts for ChatGPT for you to explore this further, and then let's talk about it. But you need to be the guide in this process and leverage these tools. So, Robbie, what are your thoughts on that?
Well, I have a quick thing. I'm sorry to back us up here a little bit.
Yeah.
Can you explain the methodology that goes into compiling this report and finalizing it, who you talk to, how you find them, those sorts of things, give the audience a little more background?
Yeah. So we have been, we survey 1,000 individuals between the ages of 18 and 44, and we divide those into 3 groups: Gen Z, younger millennials, and older millennials. And we make sure we have a diverse sampling across race and gender, and income. And then, and we've been leveraging a platform called Pollfish throughout this whole time. We looked at a bunch of different platforms for this, and that seemed to be the best to be able to give us that kind of diverse sampling. So, so that's how we put this together.
Yeah, when I was looking at this report, my thought was, let me go back and look at the 2024
Yeah.
version of the report, because when I went back, it was, yeah, people aren't confident. It's accessible. YouTube is the best. There's a growing distrust. And so what I wanted to talk to you about, I don't know if it's worth spending much time on, but were there any noticeable changes year over year that you want to bring to people's attention, or is stuff pretty similar? Did anything jump out, or?
I mean, I think, and Ralph, feel free to jump in on this, but one area was the distrust that we talked about that has just dropped so significantly year over year. One thing that was positive is that we did see those who were very stressed financially, that has increased year over year. And of course, that started in the pandemic. So, and we've added questions, we've adjusted this survey to adjust to what's happening in the market. We did see that growing distrust in the market itself, or whether now is a good time to buy, that has dropped. So people are feeling more and more skeptical that now is a good time, which I think leads to the conversation around people thinking that maybe homeownership is out of reach or just a dream. And that's where, again, I think there's a lot of room for growth around talking about the creative strategies to reach homeownership, talking about down payment assistance and co-buying and these different, how to get there. But yeah, I think there's the lack of confidence, I think, remained pretty stable, although it's not good. But their lack of confidence in their own knowledge and home buying.
So yeah, like on the 2024 report, I saw some stat and it was like in the last 6 months, basically 80% of millennials had checked their credit. It was only 50% of Gen Z. I'm wondering if we'll see over time Gen Z start to grow up and have more
Yeah.
savings habits or have more credit checking or things of that nature. You saw that a little more this year? Or?
Yeah. And I think we'll see that more so next year. I think it's interesting. And of course, right now, we've been keeping the age range 18 to 44. So we're still looking at next gen, which is, these are people that are entering adulthood all the way through having potentially bought their first home. So a few years beyond that average age of the first time home buyer. And one thing I will mention is that the average age of the first time home buyer rose from, I think it was 33 and
36 to 38 from this last year, but
Okay.
33 the year before.
Yeah. So, I mean, it has jumped so much over the last couple of years. So you're going to see that reflected in the data as well. And also I think looking at, but yeah, you look at the difference between a Gen Zer and a millennial, and we don't see much difference between a younger millennial and an older millennial in the data, but you see a big difference from Gen Z. And some of that is cultural, like where they go to for information and that kind of stuff. But a lot of it is also savings and like growing up wanting more stability and that type of thing.
Awesome.
Ralph, is there anything else that you saw that you thought was interesting around how things have shifted through the years?
No, I think you hit the core of it. To me, there's a lot of things that have remained the same along the way. Video hasn't changed. But I think the more and more we explore the video part, we start to find out what needs to be put on the video. You hit the nail on the head about the average first-time home buyer. That comes from the NAR buyers and sellers report. So if you haven't looked at that, definitely I encourage you to check it out. It costs money to download the full report, but you can get the summary and you'll get all the quick info that you need in there. And we have seen over the last few years the average age of the first-time homebuyer increasing. And then you start thinking about, well, why is that? And you start thinking about, what does society look like today? You have kids that are, have a lot of student loan debt. You have, they're staying at home a lot longer, living with mom and dad. And then along with all the things that we found in this report over the last 5 years, it starts to all make sense that we've gone from 33 to 36, now 38 last year. Are we going to hit 40 over the next couple of years, where we start seeing that, or hopefully we can, stabilize that a little bit? I will add something, and I think, boy, it's spot on. Somebody put in your Q&A, they put an anonymous attendee, so I can't give you credit for the great question, but they mentioned, I think trust is dropping because the mortgage industry, as well as the real estate industry, haven't had to explain value. We're not very good at articulating value. We have the information, but we don't address it. What is important to the borrower? Do they know what you do? Have we asked what's important to them, provided options and solutions outside of just rate? Just some thoughts, and they love these calls. So great. And I couldn't agree more. And I know, Kristen, you always promote, a rent versus buy analysis through Mortgage Coach, and many other tools that are available out there to show that value, to show what it is. Going back to what I said earlier, understanding what's the goal here? Is it, why are they buying this house? Is it a first-time home buyer? Are they a move-up buyer? Are they downsizing? You got to find all that stuff out, and we don't do a great job. It's really, we're such an almost like robot mode of get the 1003 info and move on to the next one and to the next one. And we need to stop a moment and get to know our borrowers, because that's what builds and helps with that distrust number.
Yeah, and Ralph, I'm listening to what you're saying there. The industry needs to articulate some value, and I'd like a little National MI plug here. Again, what's the value in collaborating with Kristen on this report? What's the value in doing this for National MI? And I should add too, for those that go to the Next Gen Resources page on National MI, there's a psychology of money report, there's a financial literacy report. This isn't the only report you do. I'm just wondering, from a mortgage insurer's perspective, why do you view this as worthwhile for the company?
Well, obviously, part of being a mortgage insurance company is helping home buyers achieve the dream of home ownership. It's interesting. I'm going to throw another stat. I don't remember the number, but Kristen got this in a report probably about 2-3 years ago. And that is the amount of people that still think they need 20% down to buy a home. And so it's kind of helping dispel that myth. I think NerdWallet had their home buyer report just recently at the end of 2024, and it said 62% still think they needed 20% down. And it didn't matter what type of education they had. These were college graduates. It didn't matter if they were first-time home buyers or past, repeat home buyers. They still were over 50% when you start segmenting it. So 62% still think you need 20% down. So the value of these reports for National MI is being able to bring this education out there to understand these borrowers and get in front of them to help educate them on how they can become home buyers. And that mortgage insurance is here to help with that less than 20%. There's a lot of loan programs out there that allow you to afford to buy a home with as little as 3% down. We're here to help with that. So we think the more information you bring out there, over the last couple of years, we've expanded beyond just the yearly report that this report is, to the financial literacy report, like you mentioned, Robbie, we even did a women homeownership report recently. So there's a lot of different reports just breaking down those segments to bring education. That's what National MI is trying to bring additional education out to our community, our industry, so that way people know there are opportunities there to become home buyers, and we're just a part of that help, in conjunction with our clients out there.
Which actually models what I think loan officers want to be doing, is instead of being seen as a commodity, you're bringing value to how people are approaching their work, and helping people get to the root of what are some of the core problems that need to be addressed. So, but yeah, I think that the looking at the deeper challenges. And what you were saying before is another perfect clip of, what we want this audience to understand is how do you build that empathy and how do you help people understand what are, exactly what the question said. So we had another question come in. Where can we find new questions to better understand and provide value to the younger generation? I think a lot of that comes through some of the webinars that we do and this show. But that might be something that we can, and definitely as you go through these reports and the 2025 report, I think you could even exactly come up with the questions and the next steps as a result of seeing what people are challenged with. But that might be something, Ralph, that we want to look at creating in a future report too. So.
Yeah. Yeah. And I think, it's funny because I recently did a presentation about just home buyer reports and just home buyer data to a group of realtors out in our marketplace. And when I mentioned I was with National MI and what I do, you could tell a little bit in the audience, like, oh, it's almost like PMI is a bad word. And I think that that's where you have to throw education out there because, there's a lot of realtors out there, quite frankly, that think MI is a bad thing. And, when I had some people walk up to me afterwards and said, wow, I didn't realize the difference MI can make in helping homeowners get into homes. I'm like, yeah, and that's extra commission in your pocket. Those are more sales for you. So it just, when I see those numbers continue to come up and then you start deep diving, like you said, Kristen, it's amazing the amount of content we can bring to our partners. We bring it to lenders out there who are our partners, but I encourage loan officers, bring it to your realtors, bring this information out to them, because that's how you can differentiate yourself from your competitor out there, because you're bringing information to help them with their business, not just saying, hey, do you have a deal? Or I've got the best product services, all that stuff that people love to throw out there. No, you're bringing true information to help them with their business.
Yeah, that's a really great point I want to plug here. You guys can download the slides. I just put a link where the slides in the report are, and download those slides, share those do a realtor lunch and learn with that presentation. You can download those 2 pages that I mentioned, page 5 and 6, that have the top insights as a handout from the report. And that could be a really great, and you could even use that as a, hey, come join, like a marketing tool too. So, or a way to have conversations one-on-one with realtors, like, hey, I want to share with you some of the top insights. And this could be a great way to build your brand as an education first, next gen leader to reach the next generation of homebuyers that a lot of people are really struggling with.
One of the things I noticed as a large takeaway of the report too, Kristen, was we're starting to see a little shift away from real estate agents being that trusted advisor. And sure, some of it's going towards Chat GPT and other, AI technologies, but I think that's an opening for originators to kind of get their foot more in the door and say, hey, if real estate agents are becoming less of a resource, that's an opportunity for us to become more of a resource. And, once you convince people that you should be talking to a lender before you talk to a real estate agent, they'll share that with their friends. And I think we can start to change the view of where originators come in the process.
Also, real quick, partnering with financial advisors, like another huge opportunity. I thought this was really interesting and definitely new this year to see. I mean, this question was new this year too, but if you were to buy a house today, who would you turn to first for guidance? And Gen Z was significantly more likely to say financial advisor. And I think that it goes to the point earlier around this person at least is perceived to have a big picture of your financial situation, whether or not that's experienced. That's what they want. They want to feel like, okay, you see the whole picture. You're not just trying to get me into a home. So if you can, one, brand yourself as someone who is going to be transparent, look at the big picture, and two, partner with those who are able to be in that market, that's going to be another great opportunity. Robbie, any other insights that you had as in terms of the report that you thought were interesting?
Well, it was actually one of the first comments that I made today, and that was just about overall home affordability. And we've seen it wane so much, and people aren't convinced it's going to come back anytime soon, because even if interest rates drop, and they kind of have to start this year, okay, cool, now we're going to start having bidding wars again, and home prices will go up. So it's not like homes are getting more affordable here in the short term. And that affordability is driving different strategies. Kristen, you and I have had people on before talk about home hacking. We've had people talk about ADUs. We've had people talk various strategies, whatever it might be. I think one person we had on bought that house next to a cemetery because it was haunted. Nobody else wanted to buy it or whatever. But lived in the garage and ran out the main house, whatever it is. We're seeing more alternative strategies come up. And so for people on this call listening to this, I think speaking with your clients about, hey, let's find a way to get you in a home. I know it's still part of a financial goal in your life to get in a home. Let's find a way to make it happen. Let's get creative. This part of this cycle with mortgage, capital market staffs or credit committees have been more likely to say, let's add some new products, because no company wants to have a borrower come to them and say, hey, I want to do this. Sorry, we can't help you, but our competitor down the street can. So, I think that it's engendering this kind of better product mix. People are getting creative, and that's something to keep in mind for people on this call if you're trying to help out your borrowers. That was a big takeaway for me from the report.
Yeah, that's really interesting. And we had Michael was asking about differences in region. I didn't look at like region Southwest versus Northeast, that kind of thing, but we did see some differences between urban and rural areas, but we don't have a big enough sample size to draw conclusions worth publishing at this point. But I do, some of the areas I would say like optimism was higher in rural areas versus urban areas, which is not surprising. I was definitely way more optimistic when I lived in Oklahoma versus buying a home in LA. So I think that part is obvious, but still goes to the point of like, yeah, where are some of these creative strategies? And absolutely go look at some of our past shows and find ways that you can leverage those creative strategies for if you're in a more urban area. And I still think people feel that effect no matter where they're living. So yeah, that was interesting. Ralph, how about you? Any other big insights you want to touch on before we're closing things out?
No, I mean, I think you mentioned most of them. There was something there, and I think you referenced that it was discussed in a previous episode, which is kind of co-buying. That was a little bit of a new one for us this year, where we started seeing a little bit more insights or more information being brought up about co-buying. And when you can't afford, you kind of now I find interesting what happens if somebody wants to move and somebody else doesn't, and how all that works out. I guess there's some additional questions to be had there. Maybe that's a good follow-up question for next year's report. But that was a little bit of an eye opener as far as where the thinking outside the box mentality that you have going on right now in the market.
Yeah, this is new for this report to dive into these specific strategies around affordability, because we've seen affordability be such a challenge. And I do think there's more room for drilling in on that. And maybe that's a future report all on its own. But we do have, yeah, as Robbie was mentioning, previous episodes where we talk more specifically about like how co-buying can work and some of the technology startups that are available for that. Yeah, Robbie, anything you want to add around that?
Where my mind was going is we're going to turn you keep saying Ralph has these good little clips. We're going to turn a bunch of these into short clips that'll be on our YouTube channel and under the short section. And we'll try and share those with you over the coming weeks on social media and stuff. But also, if you want to share those with your borrowers, people, feel free. Mortgage insurance isn't an evil out there. Mortgage insurance, people might bemoan that they have this payment if they can't put down 20%, but it's helping get people into homes that otherwise wouldn't, and so I think that my takeaway from this call today, Kristen, is we're at a time where people are starting to rethink certain things. Hey, maybe I don't have to put 20% down on a home. Hey, maybe I can talk to a financial advisor instead of a real estate agent. Hey, I can get my information from ChatGPT. I like the videos that Sean Herrero or these other originators make. I want to work with them. I trust, so we're seeing some shifts out there, and I commend you for doing this. This is the 5th year that it's been done. I'm looking forward to the 6th year already. And I think this has been a really worthwhile discussion.
Yeah, thank you so much, Ralph and Robbie, for the discussion. I did want to mention there was a question in here that goes straight to my heart and the nonprofit that I work on, First Home IQ. He asked if you're interested in reaching out to the education system, which this report absolutely points to an opportunity there. Have you built any tools to help begin improving the financial literacy for the next gen high school and or college students? It's exactly what First Home IQ does. If you are interested in looking at some of the education that's available to either go into schools or do first-time homebuyer workshops, we have the playbooks, the presentation materials, everything you need for that that, just go to firsthomeiq.com to check that out. So there's so much more we could dig into. This report is lengthy, so please check it out, read through it yourself, and reach out if you have any additional questions or thoughts for future shows that you want to have us focus on related to these topics. So thank you, Ralph, for partnering, and thank you, Robbie, for spending the time chatting about it today.
And thank you, National MI, very much for being a part of this. And we will see everybody next month.
Great. Thanks, everyone.
Yep. Thank you.